It has been a pretty interesting market for the producers this year, selling, gold at $2,700 an ounce and silver, north of $30 an ounce is a pretty good place to be, historically. Silver's only gone through $30 three times in my lifetime. So, for it to be up at these types of levels is obviously a pretty good thing.
BRICS nations has somewhat died down. I expect to see a reemergence of this discussion in 2025. Trump saying he'll enact 100% tariffs on the BRICS nations.
But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
Our mint is also doing quite well, with the launch of the different products that we've been putting on our mint. And so it's been a great market for silver. It's unfortunate it's below 30 now. Hopefully it has a nice bounce into 2025. The market is actually quite small. It's around $30 billion, which is, not a very big market. That market could fit inside the market cap of Apple how many times, or the market cap of Tesla. That's the entire silver sector I'm referring to. So, the silver sector produced about 830 million ounces this year, thereabouts. We don't know the final numbers yet, but we'll be consuming, or if we match last year, we're about 1.2 billion ounces of consumption, leaving a deficit of somewhere around 400 million ounces. There is recycling that is also part of that. There's about 150 million ounces that's supplied through recycling. That number, fluctuates. So, you have an actual physical demand deficit of something like 250 million ounces. But that number that you referred to before, the 1.2 billion ounces that's sitting, in hoards, those are with the exchanges. And there's an interesting chart that I saw just a couple of months ago, which we've used a couple of times in our own presentations, but a lot of that silver is actually allocated to the ETFs, so SLV and SIL and so on. So even though that metal shows up on the exchange as a metal above ground, or silver potentially available for sale, it's actually really not. And so it's a small portion of that actually. Because you've got about something in the order of 800 million ounces in the ETF. So there's really not a lot of silver around. There are hoards, of course, which aren't counted. Governments do have silver as well. They don't report it in many cases. So the deficits are filled. But I think there's going to be a supply shock. I think that there's going to be a situation that arises where ABC tech company, runs into manufacturing difficulties because they can't get their metal on time. Interestingly enough, and I'm sure you know this, Steve, but the two big drivers of metal consumption has been the automotive sector and the solar panel sector. Both of those sectors are now consuming 40% of the mine supplied every year. And that's a pretty big number considering those two industries didn't really exist, over a decade ago. When I put First Majestic together, I was looking at computers and cell phones, and I wasn't even looking at electric cars or solar panels. And, that's what I thought was going to be the driver, for demand going forward. But it's now turned into these other industries. And now we're seeing there's about 10,000 uses of silver from the commercial perspective, which is pretty enormous. And now with the new renaissance of nuclear energy, and the governments around the world looking to build nuclear power plants, some of them, these nuclear power plants, depending on their size, consume also a lot of silver. So we're going to have another big driver of silver demand coming up over the next decade. Growing is obviously important. Shrinking is not exactly very fun. But one thing that management of mining companies is very well aware is that these mines don't last forever. right? So you're eventually going to run out of, whatever metal you're mining. And hopefully it's decades into the future, but sometimes it's less than that. And you have to make plans, looking very far ahead. And we make plans today, and we look out 5 to 10 years on how that's going to affect the business. Because we know, what the mines are. We don't know exactly, but we approximately know what mine will be producing 3 years from now, 5 years from now. It doesn't need more development dollars today for it not to get smaller. Does it need more exploration to go look for more ounces? So we're always trying to move money around in the smartest way possible in order to maintain the size of the business. M&A really adds to that. So M&A can buy you time. Like if you know that a mine is going to die in 3 years, you go and bolt on a development project that it's going to cost. It's going to take you 3 years to build it. So you go and build that mine, and it replaces the mine that is going to come offline 3 years from now. So you're always trying to plan that type of move going forward plan, and it's a constant discussion that we have on quite a regular basis. We do know that approximately 1 billion ounces of silver trades a day in the paper markets, and there's something, I think that number of 240 or 2.4 you suggested. I think that suggests there's 240 trading days in a year. So 240 times 1 billion, 240 billion ounces of paper silver gets traded annually. And the miners only produce 830 million ounces. So the banks know when this metal's coming, and they know how much paper they can write against the metal. And that leverage is enormous. It's over 300 to 1. So that gives them a lot of power over the price of the metal, because, during the Reddit crowd squeeze back in 21, I guess it was, silver went from $18 to $30. And I remember the head of the CFTC at the time was on CNBC and saying, thank goodness we were able to tamper down the market, because there had been serious financial harm done if the silver price had continued to move higher. So here's the regulator talking about they're successfully prevented an instrument trading on their market, their exchange, from going higher. So the regulators themselves worked with the banks to manipulate the price of the metal to make sure it wouldn't continue to move. And then over the next few days, of course, it collapsed, and it was quickly back to the low $20 range within the next couple of months. And everyone who jumped into the silver space, during that whole Reddit squeeze, lost a pile of money. And who made it? It was the big banks that made it, because they just sat there and bought back all the paper from all those stupid retail investors that came in and bought it from the banks in the first place. So putting a big smile on the face of all these traders at all these banks. So, that's the market we have. What's going to change it? I think it's going to be the physical market that has to change it. I think that for us as a mining company, if we can help, by taking some of this metal away from the banks, if other mining companies want to use our mint and put their silver through our mint and get it bigger than the 10 million ounces that we could supply to it, then that would be better for the mining sector as a whole. Give that miner a better margin for their ounces that they're producing, and also take more silver out of the physical market, more silver out of the paper market. So the other thing that's going to happen, if it's not that's going to break this system, it's going to be some supplier or some manufacturer, like an automotive company, a BMW, a Tesla, Apple, Samsung. We've already been approached by Samsung once, or actually twice, I think it's been now. But you saw Tesla, invest in nickel. Tesla's invested in lithium. The industrial buyers that need our metal, and not just silver, but other even copper companies and so on, they're, I believe, are going to have direct supply agreements right with the end purchasers, and they're going to be bypassing the COMEX because I don't think they want to take the risk of supply. And I think that's where the mining sector is going.
BRICS nations has somewhat died down. I expect to see a reemergence of this discussion in 2025. Trump saying he'll enact 100% tariffs on the BRICS nations for continuing their desire to move away from the dollar. Well, that's not a tariff. Tariff protects manufacturing, domestic manufacturing. That is a sanction masquerading as a tariff. That is financial warfare. That is not something that I think will dissuade the BRICS from continuing to move forward. I think that from a domestic standpoint, I think the debt issue is something that has to be front and center. I mean, even Trump just sent out a tweet the other night saying, thanks to what the Democrats have done, 2025 could be a 1929 style depression. You look at the latest Treasury data that was just released for November, which was the second month of fiscal 2025. The U.S. spent $584 billion for October and November. That's the first 2 months of 2025 for the fiscal calendar year that Trump is inheriting are officially the worst start to a year ever for the Treasury. When I look at gold acquisitions, again, China doesn't buy gold for no reason. And they've bought 1,000 tons since the start. That's what they tell us, since the start of the Ukrainian war. At the same time, they've sold 250 billion of our U.S. treasuries. This is a trend that will continue. This de-dollarization will continue. I think they'll continue to accumulate gold rather than try to devalue their yuan against the dollar. They'll let it happen organically by accumulating gold. I think that's something certainly to focus on. Of course, it's the bond market. At the same time, I think the bond market, or with the Fed creating trillions to fund these deficits, that not only that they're inheriting, but the debt that is coming due. I think the bond market's getting very nervous that they see inflation coming back, that the ballooning U.S. debt is something that has to be dealt with, and how many treasury securities will have to be created to do so. At the same time, many of the countries that traditionally supported our debt are moving in the other direction. So I think that's something that we'll have to continue to watch very, very closely. But yeah, I mean, if I had to guess, I would say also we're not out of the woods yet regarding the banks. And I'll keep coming back to what happened in Lindsay, Oklahoma as a trial balloon. They didn't say a word about it on the media. It was literally just kind of stuffed under the rug, and yet it's the first bail-in in this country with over $1 trillion in commercial real estate loans coming due in 2025, with interest rates moving higher on the back end. And it's not the federal funds rate that matters. The economy runs on the 10-year Treasury. I mean, the mortgages and the credit cards and the leases and all of these things, they're all about the long end of the bond market, which is moving in the other direction. What havoc is that going to wreak on the banking industry? What havoc is that going to wreak in the commercial real estate? And I keep coming back to this thought of restructuring. I mean, Trump is the bankruptcy king. I mean, is this something that's baked into the cake? Do they know that we're going to have to reset some way? And is he here for that reason? You know, I've done interviews with people like Simon Hunt, who will tell you that he was selected, not elected, and he was selected to usher in this digital surveillance state. He talked months ago with me about they're going to issue a digital ID under the guise of election integrity. What do you know? He just said that. A lot of the things that I guess I'll just simply say this. And someone said it to me very apropos. He said, you know, is Trump the Trojan horse, or is he riding on the Trojan horse? And that, I don't know. And I guess I would just simply say this after what we've been through for the last 4 years. If you don't look at everything cross-eyed, if you don't think outside the box, everything that's presented to us, I think you've missed everything that we lived through for the last 4 years. So as happy as I am that he's here, you have to wonder, what does it ultimately mean? I mean, what better guy to have oversee a bankruptcy or a restructuring or a reset than someone who's known for doing that professionally, maybe better than anyone? So I think there are a lot of things to keep your eye on. Most of them center around debt, and the BRICS have not lost sight of that. So don't underestimate the BRICS. Don't lose sight of the debt. Be optimistic, but understand that they're just like in the Shawshank Redemption, as I said with you before, Dunnigan, you have 2 miles worth of crap to crawl through to get to the other end. And maybe there is reason to be optimistic, but there is no way of getting to that other side without dealing with the mountains of debt and that tunnel full of crap that we have to crawl through. So I think 2025 is going to be a volatile year. And when the president-elect says this next year could be 1929 style depression, thanks to what we've seen already by the Democrats, I think people need to, and then see 6-1 insider selling versus buying. I think we need to be cautiously optimistic into the new year.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.